morning. Can you hear me properly? Hi, okay. Let me first start by introducing the company I work with. Most of you would have not heard of it. It's the leading FinTech company from China that most people outside China don't know of. Creditease is the leader in China in marketplace lending, wealth management, and asset management. Started 12 years ago, and as part of our wealth business, we have a lot of funds that we offer to the high net worth and ultra high net worth clients. So that includes, we have a FinTech VC fund, which invests directly in FinTech companies. It's a $1 billion fund. Most of our investments are in US and China, and I manage the non-China investments. We also have a VC PE fund, fund of funds through which we invest in several VC and private equity funds like Blackstone, Carlyle, KKR, Ribbit, Nika, Redpoint, et cetera. So we LPs in about 20 funds in the US. And in addition to that, we have real estate fund of funds and a credit fund that buys loan portfolios in the US. But majority of the financial services business for the company is in China. I'm based here in Palo Alto in our Silicon Valley office, and we have a small team here. We also have an office in New York, in Singapore, and Hong Kong, but most of the business and the people are in China. So I joined Creditease about 2 years ago. Before that, we were living in Singapore for about 20 years. I used to work with Citibank and with Standard Chartered Bank in various regional and global roles. My last role in Standard Chartered was as the Global Chief Innovation Officer. And today I'm going to talk to you guys about FinTech and artificial intelligence. And I'm going to share both the perspectives on what we tried to do when I was in banking and how we tried to apply some of these new AI initiatives in our bank in different countries, and also what we are seeing now as we try to make investments in FinTech companies in US and in China, and also elsewhere. Very quickly, these are the things I'm going to cover. So let me start with the investment landscape. So as you can see, the investments in artificial intelligence have been going up very significantly. This is not just FinTech. This is all investments across different industry verticals, but very rapid growth. Again, investments have been across companies at different stages, seed stage, growth stage, in different parts of the world. In fact, there are more investments in AI in China now than in the US, and we are seeing a lot of interesting things happening there in the AI space. So what do we mean by AI? There are many different aspects of AI, many different applications across industries. And when we look at FinTech, the AI applications are actually pretty basic. And nothing very sophisticated, nothing very advanced or complicated. Very basic use cases, but very interesting ones. A lot of what you hear about using AI in FinTech is mostly hype. Even if I say so myself, having done several POCs which did not work. But things are starting to improve in the last couple of years. And I'll talk about some of the areas where it has worked very well. And it's starting to show significant benefits for the companies that are using AI. So this was a recent study which provided a breakup of which aspects of artificial intelligence are being used the most. And as you can see, the biggest bubble, the biggest circle in the middle is machine learning. So most of the applications are built around using machine learning. And that is the case for FinTech too. Now, before I move forward, I just want to check with you guys, just a show of hands on how many of you are from the banking industry. Okay, quite a few. And FinTech? Oh, much more. Wow. And how many of you are using AI in your areas? Okay. Not that many, but still quite a few. That's very good. That's very good. So I hope some of what I say resonates with you on what you are seeing or what you are doing. And if you're doing some more cutting edge, different from what I say, I would love to hear about it after I finish. So as I said, most of it is in machine learning, and then a lot around biometrics and facial recognition. This was one of the tweets I saw a few months ago. I loved it, and I said I must show it. It's totally true of the financial services industry. Confusion between AI and machine learning. Most of what you see is machine learning and not, as I said, not some of the other applications. So when we talk about the FinTech ecosystem, we talk about different things. We talk about the lending ecosystem, we talk about payments, we talk about Robo-Advisory, which is in wealth management and savings. We're starting to talk more and more about digital banks and de novo banks, payments, remittances. So I'll touch upon some of these areas and on how AI is being applied. So let me start with lending. So a few years ago, until 2 or 3 years ago, about 75% of all VC investments in FinTech were going in alternate lending and consumer payments. That was the area that was growing the fastest, both in China and in the US, also in UK and Europe. So lending was really the fastest growing FinTech space. And it made sense because if you look at the global banking profit pool by different verticals, consumer and SME lending is 29% of the profit pool. It's the single biggest block of profits. If you look at lending in corporate clients, or if you look at investment banking, private banking, payments, business payments, the profit pools are relatively smaller. So it was logical that the first area that the FinTech companies focused on was consumer lending and small business lending, which was also called alternative credit, started as peer-to-peer lenders and then evolved into marketplace lenders. And part of the reason why we saw such a big upside in the growth of lending companies in the last 7 to 8 years ago was partly because the banks had become much more cautious after the crisis, and partly because there is a large segment of consumers and small businesses that are not served by the banks. And there was definitely an opportunity for new companies to come into this space and start serving the segments that were underserved by traditional banks across different markets. But more than that, there was also a significant opportunity to leverage on the new type of data sources that the banks were not using. Banks were traditionally relying on credit scores like FICO scores, and with use of smartphones, with use of e-commerce, a lot of new unconventional data sources, data was being generated, and the new type of companies started using these alternate data sources. There was also a little bit of regulatory arbitrage, which continues to this day. When banks do credit decision making, most of them end up using very simple regression models. They don't use machine learning, they don't use AI, partly because of a variety of reasons. Many years ago, it was lack of skill set in the teams that were building the models. That is no longer the problem. But most credit models need to be approved by the regulators. And lack of skill set within the regulatory space is also a challenge, right? I mean, you build the models, your internal auditors need to be able to review and approve those machine learning models, and then the regulators need to be able to approve. So it's been a very slow process. A typical risk model in a bank, from the time you start building the model to the time you get approvals and deploy it, it's about 18 months if you're lucky. Whereas a lot of the FinTech companies are able to build models using alternate data sets and deploy them within a matter of months because they don't need to go through all those approvals. And they're able to use data sources that banks would generally be careful about using. So that really helped. The other area where it was used a lot was in mostly neural networks in fraud risk management. In fact, that's been the single biggest application of AI in banking for more than 10 years in fraud prevention. I mean, use of neural networks has been extremely common and very, very effective. Banks use it. PayPal was the first one to start using it really well. And now most companies that do online lending use it a lot. Within Creditease, one of our subsidiary companies called Urendai, which is listed on New York Stock Exchange, it was the first company in the world to start doing lending using a mobile app about 5 years ago. So it was the first mobile lending app. And we use machine learning a lot there for fraud prevention as well as for credit risk management. These are the examples of how some of the alternate data sources are being used. There's a whole ecosystem of companies that have come up to support the lending platforms. So it's either around, so for example, we've invested in a company called NAV, which does credit scoring for small businesses, and it's one of the best applications of machine learning and data science that I have seen. There's another company called TrueAccord. Both are in the Bay Area. TrueAccord does digital collections. They use machine learning really well for collections. And then there are so many others which support the lending ecosystem, in addition to the marketplace lenders themselves. And fast forward, I mean, you would have read all these headlines where China wants to take it to a whole different level where the citizens will have a score which will be used for all aspects of their life. Sometimes it seems like a very dystopian view of the world. I don't know how many of you watch a BBC TV series called Black Mirror. Anybody watches Black Mirror? Yes. And you would have seen that episode on how credit scoring can, if not managed carefully, how it can ruin somebody's life. Season 2, episode 3, in case you haven't seen it. Next, let's talk about another area where AI is used a lot now. It's become very popular in the last, I would say, 18 to 24 months, and that's conversational AI, which is essentially use of chatbots. We're all very used to Siri and Alexa and other such applications, and many financial institutions are now starting to build conversational AI platforms using chatbots. American Express has one, Capital One has one. When I was at my previous bank, we tried to build one using on Alexa. So those are from the banking side, but in addition to that, we are also starting to see several FinTech companies come up, which are building solutions, conversational AI solutions that can be integrated with social media applications like Facebook or like WhatsApp, and they can help with customer sourcing and also with servicing options. I have to say most of what we call conversational AI in FinTech is very basic and very primitive. It's not really a two-way dialogue. It's like you ask one question and you get one answer, and that's it. And then you ask another question and you get another answer, sort of like Alexa. It can't do a conversation, but it can answer every single question that you ask, but only that question. It's the same. Some Japanese banks talk about Pepper, the robot. It's really cute, but it doesn't do anything. I mean, it's mostly in the branches. People go and tap it on the head, and it rolls its eyes and looks at you very cutely and greets you, but nothing very much beyond that. Of late, we've also been hearing a lot about Sophia, the first humanoid robot which got citizenship in Saudi Arabia. There is also a very, very funny video on YouTube of Sophia having a conversation with Will Smith. And if you haven't seen it, you should see it. But again, when I talk to people who are hardcore into AI and I ask them about Sophia and how advanced is the AI application there, most of them would tell you that it's a gimmick. There's certain information that has been fed into the robot. She can recognize about 60 different types of expressions and can do conversations one question at a time, but not a proper long conversation. But it looks really nice, and things like this really help create a lot more awareness and hype around AI. So when it comes to FinTech and financial services, these are some of the applications. Like I mentioned, the banks are starting to use it. The biggest use so far is micro-conversations embedded within social media apps to help with sourcing and with customer service. We tried multiple pilots when I was at Standard Chartered with different solution providers. It was not, the technology was not so good at that time, but it's gotten much better. And there are many possible applications. Some are consumer-facing and focused on revenue generation, and then some more can be internally focused, focused on cost reduction. For example, HR portal for employees, like if you have people answering emails, instead of that, you can use chatbots. Or if you have employees who need to refer to a lot of policies and very long internal documentations, you can use chatbots to make life easier for them. So those are some of the applications that are being explored. But I would say from an operational perspective, the one that's been the most beneficial and widely used is RPA, robotics process automation. Very basic application, rules-based. It automates the workflow and the internal processes, or external, based on very simple rules, but it's been very, very helpful in terms of increasing productivity and managing internal costs. A lot of banking applications, I've given the example of H2O only because we invested in that company, so I decided to show that, and the other one called Active.ai, but there are many others. H2O works with several banks in the US who've built their FinTech applications on their platform. Several others use Google TensorFlow. Really, the difference between choosing one or the other is that, if you choose TensorFlow, you have to be on the Google Cloud. With H2O, you can have hosted solutions, and a lot of regulated industries like banking and pharma prefer to have hosted solutions. Another one, Robo-Advisory. Now, this, in my mind, is the most hyped one. It's even called Robo-Advisory, and there's almost no AI in it. Robo-Advisory sounds very, very glamorous and very nice. The reality is that as per SEC regulations or regulations in most countries, you can't use cognitive computing or machine learning for advice. You have to be able to demonstrate how you offered a product to somebody, and that's essentially based on simple rules using historical data, and that's to avoid being caught for mis-selling. So yes, they use RPA, the process is better, the UI is better, UX is better, but there is very little AI in that. It's rules which map your risk profile to the product risk profile. Again, a lot of the robo-advisory firms report their massively growing AUMs. And again, I would say one has to be very careful on what they count as AUM, assets under management, for the robo-advisory companies which are consumer-facing, the B2C ones, because the AUM can be the AUM which you actually manage and earn fees on, or the AUM can be the overall AUM that the consumer puts on your platform just to get free advice, but you make no money on it. And most of them, when they report AUM, they report the latter, which is not a true reflection of the AUM that they're managing. This one is my favorite, use of biometrics, image recognition, et cetera. I think this is one area where the technology has improved so much in the last few years that it's mind-boggling. It is also very tough. I mean, many of you would have seen this slide. It continues to be a really common problem. It's very hard to train machines to recognize images correctly. And in this particular one, the machines can make a mistake on whether it's a chihuahua or a muffin because they look so close. And then you can imagine what happens when you have to use machines to recognize 7 billion people. But the technology's gotten exceptionally good. In China, it's gone to a whole different level. There are cameras on streets and different places, and they are really, really good at recognizing faces now. There was an article recently about a guy who went to a concert, and he was amongst 60,000 people, and he thought that he won't be recognized because he was in a crowd. But the cameras at the entrance spotted him, and then he said that within minutes, they were able to find him in the stadium, and the cops came to his seat because the technology is really good. And I'll just share with you on my own personal experience. I was in Hangzhou recently, a couple of months ago, and we were checking into a hotel there. I was with two of my colleagues who are from China, and they had these, the last image there, they had these iPad kind of devices at the counter, which kept trying to lock onto everybody's face. They could not find me. I'm so far not in the database. But my two other colleagues, it recognized them correctly. Can you imagine 1.4 billion people, and this thing just focuses on your face from a distance of 3 or 4 feet and matches you correctly. They still had to show their ID card to prove that they were what the software said they were, but it was scarily accurate. It was really spooky. Apparently, the police in China also have these glasses now, which are used for facial recognition on the streets. And you would have read about a company in China, SenseTime, which is driving a lot of these surveillance cameras nationwide, which recently raised their Series C. It was a 600 million Series C at a valuation of over $3 billion, making it the most expensive AI, early-stage AI company. Oh, and the other one is, again, if you now jaywalk in China, the cameras can recognize you, and you get a ticket. And apparently, they're working on the next step where you will get a text message which will show you jaywalking in a particular place, and the text message to your phone will say, pay the fine. On the plus side of biometrics, there are 1.5 billion people in the world who don't have a legal identity, right? We hear a lot about the refugees in Europe who don't have a legal identity, and they get a lot of media coverage and airtime, but actually that's only 64 million people. I don't mean to say 64 million is a small number, but what I'm trying to say is that the number of people who don't have a legal identity in the world, who don't have papers to show that they were born, who don't have a birth certificate, and therefore who cannot vote, cannot buy property, cannot travel, cannot get vaccination, et cetera, is way bigger at 1.5 billion. And a lot of solutions are now being built to use biometrics and digital identity to create a solution for this problem. All of you must be aware of Aadhaar in India. A lot of people who didn't have a legal identity now do have a digital identity and an Aadhaar ID number. So I'm sure that 1.5 billion number now that number was 2 years ago, and it must be much lower now because of India. But in terms of applications within banking, where it's been very helpful is in video banking, right? In the past, if you wanted to open an account, in almost every country in the world, as per KYC regulations, know your customer regulations, you had to go to the branch at least once for a face-to-face identity check, and then after that you could open an account. But in the last few years, many regulators, like the regulators in EU, in India, in Singapore, in many African countries, have started allowing what's usually referred to as video banking, where you can be on a video and subject to certain verifications that can be used as a proxy for a face-to-face identity check. And the companies which provide those solutions, like BioCatch is, Onfido is one, Jumio is another one, where they take your picture from the video, but they also have to do certain tests to make sure that, what they call as liveness tests, to make sure that it's you in real life and not somebody putting your photograph or your recorded video in front of the camera to open the account fraudulently. And then there are other companies like BioCatch, which use your biometrics print on how you use the keypad, on how you use the mouse, how much do you pause before responding to certain things. They use all of those measures to also help with online fraud checks. And again, these are the companies that are now working with lots of banks in Europe and in different countries to provide solutions for use of biometrics. Another area is insurance. And again, when we talk about the biggest application that we hear about in the automobile industry is self-driving cars, different versions, from level 1 to level 5, different versions for different types of cars. A car may be at level 4 from a technology perspective, but maybe only at level 2 from a legal or regulatory perspective. We're not going to go into the AI aspects of self-driving cars, though that's the biggest application. But in the FinTech space or in the InsurTech space, the conversation is all around how do you insure these cars? And who do you insure? And if something goes wrong, who's at risk? Is it the car manufacturer? Is it the car driver? Is it the third-party parts supplier or whatever? Similar conversations are starting to happen in 3D printing space as well on, if something is wrong, where does the liability sit? And also in terms of using a lot of the data collected from the various devices that people nowadays use. Everybody loves being the quantified self, but the information that is then stored and used for decision-making and scoring models and pricing and the ethics around it are big discussion topics. Which brings me to the last point that I wanted to make about the advancements in AI, it's great, but it also comes with its share of concerns around privacy on how the data that's stored is being used, especially with, there's a lot more attention to it now, given what's happened in the Cambridge Analytica case and the whole Facebook conversation. I think in the last 2 weeks, I've got more emails from different people informing me about, like yesterday there was one from Twitter saying their passwords got exposed and I should change the password and I should also change the password on all other places where I had used the same password. There was one a few days ago from Fitbit. Everybody's suddenly become, I think the data was being exposed earlier also. They've become much more conscious of informing you very quickly when they get hacked. And which then brings us back to the question on the permissions we set on different applications and how do we want our data to be shared and stored. And if you look at the way people view it, at one end of the spectrum is Germany, where people are. There was a study done by Harvard Business School where they asked people in different countries on how much value do they attribute to their personal data and how much would they pay to keep it safe and secure. And at one end was Germany, where people cared a lot about their private information and would pay a lot of money to keep it secure. And I think at the other end was China, where India was closer to China, but slightly better, where people are less concerned as of now about how their personal information is stored and used and shared across different providers. And as we always say, technology has no ethics. It's up to the humans who build it on how it should be used and how we develop and put ethical boundaries around it. The other thing that you hear a lot these days linked to AI and automation is about the jobs, the impact of automation on jobs, especially AI. So here is a very quick summary of, I think it's from, I can't remember where it's from, maybe one of the World Economic Forum papers on the type of jobs that are likely to disappear and the new type of jobs that are likely to be created. And almost each one of these ends with, examples saying like farming jobs disappeared, but something else came up, so the future is always bright. These kind of jobs will disappear, but something else will appear. But the thing to remember is how do you prepare and how do you build your skills for the new type of jobs that will be there in future. The not so exciting part of all these papers is the percentage of jobs in financial services that are likely to disappear in the next 5 to 10 years. Anyway, in summary, there are two schools of thought. AI is going to change everything, but whether it's going to change it for better or worse, different people have different opinions. And the speed at which it will change things, again, different people have different views on it. The one that we hear a lot about is the notion of singularity, where man and machine will converge and the machine intelligence will become better than human intelligence. People at Singularity University say that when they say singularity is near, some people say 2045, some people say 2035. And then when you watch movies like Her, you sort of get a glimpse of what it might be if that happens. It does seem very scary. I don't like that view, but it's not likely to happen in the next decade at least. That's it from me. And if we have time, we can take a few questions. I don't know how we are on time. Do we have time for questions? 1 minute. Okay, 1 minute, one question if anybody has. Otherwise, thank you very much and have a fantastic day. Thank you.